Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I will be your host today. So today we have a special guest, Matt Leising. How you doing today, Matt?
I'm great, Kurt. Thanks for having me on.
Yeah, good. Glad to have you. Well, this is an interview I've been looking forward to for a while. I know it's maybe out of favor in terms of what everybody wants to hear about, but it's essential to kind of the future trends that we're going down, and of course that's what we look at is what's in the future. So Matt, maybe you could tell us a bit about your background and what you do and how you got here.
Yeah, sure. So I've been a reporter my entire career. I spent about 17 years at Bloomberg News, where I was covering Wall Street and how markets work or don't work. It was a beat called market structure. So I kind of got to know the ins and outs of the futures market, the bond market, treasuries, stuff like that. So very important markets to the banks and their customers and investors. So then in 2015, I kind of finally wrapped my head around blockchain and Bitcoin and what it meant. I had always dismissed Bitcoin, didn't think it was a real thing. But then when I understood that like the blockchain that made it all possible was this global network of computers that was outside the control of any government or corporation, that really just kind of sparked my curiosity. And I quickly realized that like what I'd been writing about for years at Bloomberg was this, Wall Street is also a network, and it's, the banks and their asset managers and their hedge fund customers, and they're trading stuff amongst themselves, every day in the billions or hundreds of billions and trillions of dollars, So I realized if you could take that sort of network approach and apply it to Wall Street and finance, it could have a huge impact on the way the financial world works, because it's quite inefficient right now. As you probably know, if you go to deposit a check, it takes 3 days to get the money into your account. So there's all these silos, and I realized like, wow, if they could all get kind of flat and on the same network, this whole system could be like turbocharged. So I went to my editor and I'm like, hey, I want to cover blockchain as part of my beat. And he's like, cool. What's blockchain? It was still a little bit early in 2015 for this stuff, but it's only grown from there. And so there's that part of it. The sort of private blockchain stuff that banks are working on is one aspect. Then there's the public aspect of blockchains like Bitcoin and Ethereum and a lot of others these days, where it's not anyone can join it, and anyone can participate, and anyone can see what's going on the chain. So ever since then, it just became more and more of my beat. I decided last year to leave Bloomberg and started my own crypto media company called Essential, where we're writing about the people who are kind of in the background making all this stuff real. It's an environment just chock full of just fascinating characters, and I love writing about people. And I think that by writing about the people and introducing maybe a new reader to them, then I can make it a little easier to understand some of the harder to grasp concepts that are behind blockchain and crypto. So that's where we are today.
Nice. Well, I appreciate there's people out there doing what you're doing, because I think it's, I first kind of learned about this in 16, 17.
Mm-hmm.
And, I was kind of like, oh, this is really interesting. But I think back then, as you said, it was kind of like, what's blockchain? What's crypto? And I think it wasn't until like late 2017 when people were bidding it up because they're like, oh, cool, free money. I didn't know much about it still. But the one thing that kind of comes to mind for me is you had mentioned that, a lot of people dismiss crypto, which I see a lot. Like there are people who just say, oh, it's the best thing since sliced bread. This is going to change the world. And then there's other equally smart people. We could argue that, but other equally smart people that say, oh, that's worthless. And, it's they don't call it a barbarous relic, but they might as well just call it kind of a useless, useless investment. So, why is that? Like, what's kind of, I mean, you've been through that gap, you've bridged the gap. So why does that happen?
Oh man, that's a great question. I wish I knew that a little more concretely than I do. What I think for many years it was understandable that people were skeptical, because it takes a while for people to get their heads around it, what it actually means and what it is. The way that I think about it, and when people say that's why is Bitcoin worth anything? Well, It's a global payment network that is outside the scope of any government or corporation. It's unstoppable. It's peer to peer, and you can pay anyone around the world as long as you have internet connection. That's valuable. That is something that's never existed before, and it changed the world. So there's an inherent value in it just there. Then you take something like Ethereum that comes along later, and now you can write computer programs and put them on a blockchain, and they're distributed in a similar global network that is unstoppable, and anyone can access it. So now you've got all this, all these new possibilities that are out there. That took a long time to develop. There have been a lot of thefts and hacks and scams, so people had reason to say, oh, this is nothing but just a bunch of, it's a big Ponzi scheme, or why would you ever put your money into it? But I think about a year or so ago, I think when I really started realizing that like I needed to do something different in my career was because I kept seeing people, pretty well-known skeptics like, Paul Krugman or Nouriel Roubini, and there's a long list of these folks, Warren Buffett, that just think it's, just vaporware. And I think at this point, with everything that's happened, and all the progress that's been made, and the different areas that you're seeing this come into, and how it's changing certain industries, I think it's just kind of a willful ignorance if you're going to still say that this is a scam and that there's nothing there, because it's all out there. You can do the research you want. You can understand it. Like there's a million hours of YouTube that you could go, a million pages of Reddit that you could read to understand this, and kind of wrap your head around it. So what it gets a little tedious to see the folks that are still, saying this is nothing, and that's why I think it does a disservice to the people who are out there building these things, because it is changing the world, and I think it is definitely it's not going away, and it's going to be how a lot of the future is. It's going to be the architect of a lot of the future.
Yeah, it's interesting. I mean, if you look through history, any sort of new technology always goes through these changes, right? Remember the internet. When the internet was a thing, or when it was becoming a thing, people were like, it's just a fad. It's just for, what do they say? It was for gamers. I think they said,
Yeah.
and, but the thing I wonder about, because, there's a lot of smart people who are kind of, let's just say they're not believers. And I wonder if it's just that they're denying technological shifts, or if it's because they're protecting their little fiefdom, right? And they're the buggy whip company that's trying to protect their company from going under, even though eventually there won't be any more buggy whips, right? Like, I
Yeah.
wonder, like, how much of it is that, and how much of it is just denying that things actually change.
I think it's got to be a mix of those things. Yeah, and I think some people get dug into their own opinions, and aren't willing to kind of see the light of day, or to change their mind, especially if they have a high profile position and they've been public about it. I think it's hard for some folks, if you're making your living based on your opinions, to say, oh, I've been wrong about this for 6 years or whatever. That's a pretty big U-turn. So I think it's a bit of stubbornness. I think some people might not understand it. It's like some people, it's not super easy to wrap your head around some of this stuff. And it does seem like you said, kind of like magic internet money, or it's like, what is this thing, and why does it go up so much and then crash so much? And so that volatility, I think, makes some people say, oh, this is crazy. Why would anybody put their money here? So, but again, I wish I knew the motives of some of these folks, because I think some of it is probably in good faith, and I know that some of it's in bad faith, and that's kind of there's a lot of cynicism around it, and that's sort of discouraging. But what we're trying to do at Decentral, and what I like to do in general, is just really introduce people to the folks that are making this stuff real, and I think that's a great way to kind of engage with people and maybe spread adoption a little bit.
So one thing that comes to mind, because I remember back when the internet was becoming a thing, some of the biggest tech companies at the time are no longer around. Like the top 20 early days, they're no longer around. And there always tends to be this rotation from, new into newer. or maybe even some bigger companies acquiring some of these companies. So I'm curious, like, what stage are we at with crypto? Crypto started in 2008, 2009, and it's come a long way, both in price and adoption. But if you look at that cycle between, that kind of acceleration and adoption versus kind of more of a equilibrium, where do you think we are in that curve? Or if you're looking at if you're comparing to a baseball game, like, what inning are we in?
Yeah. Gosh, I, let me think of it or describe it in a little slightly different way. So
Okay.
there's been, it's like a roller coaster, and it's been ups and downs, and we're in the, it's a very cyclical thing. So there have been run ups and then crashes over the years. But if you look at, in general, the price is still going up, the arrow is going up to the right. So we're in a downturn right now, but I think we've been in these downturns before, and what tends to happen is that when it goes quiet, people build things, and then when they come out, and it tends to end that down cycle when new stuff is released, and you get more engagement, and people are now able to do more on a blockchain. So a good example is back in 2017, 2018, there was a huge run up when Bitcoin hit 20 grand. That was the highest price ever at that point. Ethereum went up to, $1,400, something like that. And then it all crashed. But what people did during that crash was they were building protocols that would allow you to collateralize loans with crypto, so you could get dollars, or you could earn interest on your crypto. We had already been through a cycle where you could do peer-to-peer fundraising, basically the initial coin offering, kind of thing, which was full of scams, but it was also a new way to raise capital from people who might use your product, which you always had to go to a bank or a venture capital fund, or some type of investor to do that. Now you could go directly kind of to the public, which was a huge deal, and that's capital formation, and is one of the biggest functions in the financial world. So now you kind of like, here's a decentralized way to do it. Lending, collateralized lending, and those sorts, like interest earning instruments. It's another huge part of finance now. It's you have this decentralized option. So then a little bit later, non-fungible tokens came out, and all of a sudden you had a way to make a digital item scarce, which had never happened before. You could copy paste something a million times, and it meant that that thing had no value. But now you can attach a digital file to a blockchain and prove its provenance, and say, okay, here's the ownership record, and I paid for it here. And you can see that there's only 10 of these that were ever created. So now you've got something that's maybe collectible, and people want to own it and hope it goes up in value, or they just like it because it's a beautiful piece of art, or whatever it is, or it's a picture of a monkey, who knows. So I think what happens in these cycles is that the innovations keep coming, and we're in a down cycle now. And I'm going to be really interested to see when we come out of this, like, what are the new areas that blockchain is going, kind of open. Like, I'm not saying that very well, but what are the new industries that are going to be able to do something in this decentralized fashion that they weren't able to do before? And I think that's what's really fascinating right now, is you've seen a lot of artists and musicians come into the space because of NFTs and the freedom and the different kind of model that it gives them to raise money, to be more direct with their fans, and maybe sidestep another onerous music company deal where they're being lent all the money to make their record, and then they never get any money back because the terms are 50% goes to the music company right off the bat, and you've got all this other stuff, and at the end of the day you're left with nickels. So I think that's sort of where I like to think about it in the cycles, is that people keep building, and we're in a downturn right now. I think we're going to come out of it, and I think there's going to be a lot of new cool stuff to get excited about.
Nice. Yeah, I've got a lot of questions that kind of crop up here. So, one is, there's obviously different language that kind of goes into here, which I think scares a lot of people because it's new and different, and it doesn't have that warm and fuzzy feeling of I can just go to my brokerage account or I can go to my bank and they'll take care of me. It's open source. There's a lot of options, but at the same time, there are a lot of options, right? And
Mm-hmm.
I know when I started looking into this, it took me the better part of a weekend to try to figure out how to use a wallet and, just making sure I wasn't losing my money.
Yeah.
Um, and I know things have changed since then, but, do you think we're at a point where, or let me ask the question differently. What do you think we need in order to get more wider adoption through that like warm and fuzzy feeling of like, all right, this is safe. I can use this, for like the mom and pops of the world that aren't like, tech geeks and people
Right.
that are just into this stuff.
Yeah. Unfortunately, you mentioned about you had took you a while to figure out your own wallet, and I think that's still the case. And that's a problem for this industry, is that um, it's it's not like the user experience is not easy, and it is a bit scary. And once you start learning about it, you realize, okay, I've got my private key here that unlocks my wallet. So if I want to ever do anything with my Bitcoin or my Ether that's in my wallet, I need this private key. And if I lose my private key, then it's gone, right? I can never access that wallet. So if you had 100 Bitcoin in there and you lose your private key, you might as well just kiss it goodbye, because you're never going to be able to figure that key out, because it's something like 64 random characters in a string. And so that freaks people out. There's no recourse. There's no FDIC insurance on this stuff. Also, if your private key gets stolen, then you're going to have everything taken from your wallet within seconds. So, and the thing is that a wallet is like your gateway into all of this stuff. And so wallet management, I think, is something that needs to be made a lot more simple and secure. But the problem is that we're dealing with like cryptographic, blockchains, and the that's the system, like that is there, and it's kind of necessary so that you can protect what you have. The other option people sometimes do is they leave their coins on an exchange, but let the exchange handle it or whatever. But I like to tell people, don't do that, because if that exchange gets hacked, they could take your funds along with everyone else's digital assets. So getting a wallet is important, because you need to kind of have your own security. There's a saying, and it's like, not your keys, not your crypto. So I don't know the answer to this, but I do think that until it gets a little more warm and fuzzy and easier for people to engage with this, it's going to limit adoption. And the problem is that the whole kind of ethic or ethos here is that it's about decentralizing these systems and taking away the power that a lot of middlemen have. And so one thing that middlemen provide is convenience. They'll do everything for you, like you were mentioning your broker. Like, they'll do all the kind of back end stuff, so you don't have to worry about how you buy stocks on the NASDAQ or whatever. In crypto, it's really kind of down to you, and it's sort of like, it is you take on a lot of responsibility for things that in the rest of our lives we kind of outsource to other people. So I wish I had a better answer for that, but I think the user experience is very much high on my list of what needs to improve for more people to feel comfortable kind of getting involved here.
Okay. So another question kind of comes to mind for me because, I love this topic. I love the technology. I think it's, there's a lot of potential there. It started originally with Bitcoin, and now we have over 10,000 different coins out there, and there are more every day. Some come, some go, but it's just exploding. And Bitcoin is, as I understand it, is not really um, it's it's centralized. It's centralized in some of the other technologies, but it's in of itself, it's not providing other functions necessarily. Whereas Ethereum actually has a function outside of just trading it, and hopefully it goes up. So can you talk a little bit about the difference between Ethereum and Bitcoin? And maybe another question I had is like, where is Ethereum in this adoption? Because everything I hear, it's got tons of potential, but it's not necessarily being utilized to its fullest currently.
Yeah, sure. Um, so Bitcoin is great at one thing, and it's a store of value, or it's value. It's like it's like internet money, and so what it's good at is, like I've been saying, if you need to pay somebody, you can send them Bitcoin. It's really all about that digital asset being some kind of value. That's really all that Bitcoin is. Like, you can't do much else with it. Vitalik Buterin is the inventor of Ethereum, and he was a huge proponent of Bitcoin. He co-founded Bitcoin Magazine, and I'm sure he still loves Bitcoin. But he invented Ethereum because he got frustrated that Bitcoin was limited. So he wanted to use this global network of computers that is a blockchain to do more. And so what he did was he created Ethereum so that you could write computer code and in what's called a smart contract, and then you can put that smart contract on top of Ethereum, and it lives in that blockchain ecosystem. So that's what NFTs are. That's what decentralized exchanges are. That's what pretty much everything we're talking about when in general you hear something about blockchain or crypto is related to Ethereum. So all the different and there are some new blockchains like Solana and Avalanche and others that are coming out, but Ethereum still has a commanding lead in terms of the market share, and it's the chain that projects want to be on because it's got the most demand and the most users and all that kind of stuff. So I think when you talk about adoption, it's hard to say because Ethereum is, mainly what people are talking about and mainly what they're building on. So it's kind of like it's slow but steady and kind of episodic at the same time. And I think it's just kind of so. What I said in my book, and I like this reference, is kind of like Vitalik gave everyone a canvas, and he's like, here, take this canvas and paint whatever you want on it. And it was just like that basic kind of layer that he created so that people could come and try to build what they wanted to build on top of this thing. And that's what's been happening for the last several years. And that's why you're starting to slowly see this spread into new industries, and people are realizing that, oh, this could solve a problem I've had in my industry for a long time, and I didn't realize I could do it this way. And now that's out there and is possible.
So tell me a little bit about smart contracts, because I think some people may not totally understand what you mean by a smart contract.
Yeah, sure. So it's basically a computer program that you write in a language called Solidity. It's it, if basically it's a contract. Like, think if you can boil almost anything that we do as human beings into a contract. It's like, you do this and I'm going to do that. Whatever. And so what you do is you say, I'm going to write this contract, and it's in the code, and I'm going to say, I want to create 10 NFTs. And then once those are minted and on the blockchain, if somebody sends me the right amount of ether to this address, they own that NFT, and the ownership changes. And so all of that can be coded in a smart contract. So a famous smart contract was called the DAO, which in 2016 was hacked. And it was basically like a digital version of a venture capital fund where you could send your ether into this contract. In return, you'd get DAO tokens. And then the idea was people who had startups and wanted to create other applications for Ethereum would pitch their idea to the DAO members and say, hey, what do you think? I want to build a decentralized exchange, but I need money to develop it and pay the software engineers and all that stuff. So the DAO token holders would vote on it. And if it passed, then some amount of money would be given to that project. All of that was meant to be managed through a smart contract and through code that was like deployed out on the blockchain and couldn't be changed once it was live. So it's, as I'm trying to get through, hopefully, to you guys, it's like it's just like this wide canvas of whatever you can think of and to put into a computer contract, you can potentially put out there on the blockchain and have the entire world be able to access it.
Yeah, I think the first time I heard about the smart contract, the first thing that came to mind was the registry of deeds, in my
Mm,
state, where they keep all of the, the titles for real estate in the state, and how inefficient and um, kind of a mess that the place is. I mean, it functions, but it's kind of a mess and it's expensive. And it was first thing I was thinking is, wow, just think how cool it'd be to have something like that on the blockchain, or to have a contract with somebody and not have to worry about, paying attorneys a lot extra to settle a contract. It just happens automatically. So to
yeah.
me, it seems really fascinating as a concept, but you know better than I. I feel like it's not. I haven't seen many applications, at least in my life, where this has happened. So, are there things currently that are running on Ethereum or smart contracts that are? You had mentioned one, but are there a lot of smart contracts out there that are in force?
Um, yeah, like it's so there's a battle kind of going on between because whatever industry we're talking about, the incumbents there aren't just going to roll over and let Ethereum take their business. So I think there's a lot of experimentation. There's a lot of new ideas that are out there, but like we've been saying, adoption is still low. It's still not like you or I. We don't really interact with it in our daily lives, except if we maybe own some of the different coins and we watch them go up and down in value. But at least for me, it hasn't, kind of permeated my life where a lot of what I do on a daily basis is something that's on a blockchain. So I think, you know, even though we've been talking about this for many years, it is still quite early in the space. And a lot of people are still figuring out how to do these things and do them safely so that, there aren't going to be as many hacks and scams and frauds as we've seen in the past. So that it's it's still early, and there's not a lot that comes to mind when I can't really point concretely to a lot of stuff right now, but I think, like, if you've paid attention to the NFT stuff, that's getting very interesting. And I think there's another uh, there's other things that are kind of percolating right now, but it's still hard to kind of put your finger on a lot of stuff that's actually like out there and something you could interact with on a daily basis.
Yeah. So I'm curious because I know you wrote a book about Ethereum, and I'm curious. There's probably a few good stories that surround that, but one of the areas that kind of comes to mind, because I feel like every week or month there's another story of something getting hacked or fraud or some sort of scam. So, can you talk about some examples of, I guess, with crypto that would be kind of interesting for listeners to hear about?
Some examples of scams or
Yeah, scams or frauds or just things with it so that people understand. Because I know there's some more famous ones. I know there's one in your book, so just curious, kind of what you've come across.
yeah, yeah, the one I wrote about in my book, as I mentioned it a little bit before, is called the DAO. It was the first kind of big project on Ethereum back in 2016, and where the idea was all these different teams were kind of creating projects to put on top of Ethereum, and they all needed money. So this company called Slockit, run by a guy named Christoph Jentz, had the idea, hey, why don't we just create one huge um, pool of money, and everyone can kind of come to that, and maybe if your project is verified and good, you can get some funding for it. So they did that, and well, Gents thought they might raise like $5 million or something in that range. They ended up getting $150 million worth of ether put into this pot of money, and it was hacked. And like there was a bug in the code that Gents had written. He didn't know it, of course, but what happened was the hacker was able to just start draining the money out of the DAO, and people were watching it happen live, and there was nothing they could do about it because this is a smart contract that was out and deployed on the blockchain, and it's not something you can just turn off. Like that's kind of one of the powers of blockchain, and also one of the drawbacks. Once things are out there, they're very hard to change, and it takes weeks, and it's a complicated process. So everybody's watching all their money just get stolen right before their eyes, and eventually the Ethereum community decided to vote to update the network so that that DAO contract no longer had the bug in it, and it was just a contract where you could go get your money back. But that was a very contentious decision in the blockchain world, because when you're dealing with people you don't know and you certainly don't trust, the last thing you want is for those transactions to be able to be reversed after the fact. So this idea of immutability is very key to a lot of blockchain adherence. And the idea that the whole Ethereum community was going to vote to kind of change history so that their money couldn't get stolen, definitely rubbed people the wrong way. But I think it also kind of put a marker down for Ethereum where, the community was all saying, no, we're not going to be like a maximalist sort of like you can never do this sort of approach to things. We know that mistakes are going to be made. We know that we're all human beings and things are going to go wrong. So there should be a way to kind of change how, or to retroactively kind of make things right. And so that is still a contentious decision to this day. There have been other crazy stories where, people were siphoning money. Like one of the biggest hacks back in the day was at Mt. Gox. It was one of the early Bitcoin exchanges. So if you were into this early, you were probably buying and selling your Bitcoin on Mt. Gox, which is just like this place, and it was based in Japan. And right under people's noses, like all the Bitcoin that was being held there was just getting siphoned off, and nobody knew it. And it turned out to be one of the biggest hacks of its time. And it's only now are people getting made whole, and like it's taken more than 10 years for it to work its way through the courts and all. It's a very complicated system. Then you got your run of the mill kind of phishing scams where people do a really good job of maybe impersonating somebody like a technical support at an exchange, and they'll email you or they'll call you and say, hey, we're upgrading our system. We need you to give us your keys so that we can move your funds. Or they'll just try to find people who are gullible enough to give them their private key. And then once your private key is in their hands, then all your funds are gone. And so, like you'll see on Twitter, there's like thousands of fake accounts where somebody will use like the picture of a well-known person, but they'll change the name by one letter or something and try to like get, like it's like the Nigerian, prince who has $5 million and he just needs your bank account to transfer it to you. People fall for this stuff.
That guy's so wealthy.
Yeah, I know. Why does he keep needing to do this? So, you know, uh, it's yeah. And then more recently, like there's been what they're trying to do now, because there's several different blockchains that are out there, and Ethereum is just one of them. But people want to do one thing on one blockchain and another thing on another, and then so there'll be a bridge, is what it's called. So you can bridge between blockchains to move assets, and it's a very new kind of technology. And there's been some real bugs in that in that tech, and there's been some huge hundreds of millions of dollars of losses based on like somebody who realized, oh, this bridge has a security hole in it and it lets me get in to steal all of the funds that are kind of sitting there. So it's it's not for the faint of heart, for sure. And I try to tell people, stick to Bitcoin and Ethereum unless you're really technically savvy, and just kind of sit on it. You don't have to do anything with it. It's like a tiny amount of your portfolio, and you might as well kind of have a little bit there just in case over the years it goes up the way that a lot of people think it will.
Yeah. So let me ask you the quick question, because probably most people aren't aware of this, but Ethereum forked a while ago, and now it's Ethereum Classic and Ethereum. How does that work, and why did that happen?
That was that's what happened when I was describing the vote after the DAO hack. So when I mentioned that the Ethereum community voted to update, it's the software that runs Ethereum. What that was called is a fork. So basically, the network of computers out there running Ethereum obviously is running on a version of the software, right? So what they did was they proposed, okay, we're going to, in this update that's coming up, it's not going to have the DAO contract with the bug in it that allowed all that money to be stolen. It's just going to have a contract there where you can send in your DAO tokens and you can get your ether back. So that there was a huge kind of campaign to make sure that everybody understood this and to get everybody on board. So long story short, the Ethereum, like 99.9% of the Ethereum community voted to update. And so now that version that everyone was running is still called Ethereum, but it doesn't have the DAO with the bug in it. It's just the DAO contract where you can get your money back. So what was unexpected, somewhat unexpected, was there is still like you think of it like a tree and it's branching, and there's a little nub that is the old blockchain that still has the DAO with the bug in it. And what was expected to happen was that nobody would keep working on that blockchain and adding blocks to it and keeping its history going. They thought that everybody would keep working on the chain that was now in the updated version. What happened was a mining pool in China called F2 Pool kept mining on the old Ethereum chain. And this is like very costly and not really, you don't really do it because you're spending a lot of money and you're not really sure why you're doing it. But what happened was when they kept doing that and adding blocks to that original blockchain, now you've got a mirror of the Ethereum blockchain. And so they started calling it Ethereum Classic. And all of a sudden, it had a new cryptocurrency on it called Ether Classic. And so it's really kind of sci-fi and kind of weird, but like all of a sudden you had kind of two versions of Ethereum. They're not really versions of themselves, but now Ether Classic all of a sudden had a value, and it got listed on exchanges and people started to buy it and sell it. And so that's how that was born. And it's quite a complicated kind of thing. And that's one thing I wrote the book, was to just kind of slow it down and really kind of get into it, in a way that people could understand. But anytime you have a blockchain that forks, you have that possibility that you're going to have a new cryptocurrency that's created. And so that's kind of the nutshell of it.
So, I know there's this term called crypto winter, which you kind of alluded to earlier. There's a lot of things going on in the crypto world, which to me is fascinating and at the same time aggravating. So the crypto winter, I'd love to, hear your thoughts on that. And actually, regulations is really another big one that I want to get into because, it affects my industry. It's not the regulations; it's the lack thereof, and the lack of guidance for anybody who's involved. So it makes it really hard to do the right thing when there's zero guidance, and they could come out tomorrow and say, all right, we're going to do these 10 things, and everyone who's wrong, go pound sand. So how do you see, kind of the regulations going? And I don't know if crypto winter affects really much, but other than people's wallets or, cash in their pocket.
Yeah. So regulation is a really interesting topic because, first of all, this is a global industry. So it's not just in the United States or Europe or Asia, it's everywhere. So that's always a challenge for regulators around the world to sort of come up with rules that are not antagonistic. You don't want to create like jurisdictional shopping where, well, sometimes people do, but if you're in the Western world or whatever, and you want to create a system that's basically got the same rules all over the world. So that's a challenge, first of all. In the United States, it's definitely been a challenge because I think regulators are in any new kind of financial product, the regulators are always going to be behind the ball. Like the innovation comes first and then the regulations have to catch up to it. That's certainly been the case with crypto, and the way that agencies like the Securities and Exchange Commission or the Commodity Futures Trading Commission are mostly acting is they're regulating through enforcement actions. So they'll go after somebody and sue them and say, hey, you're breaking the rules. These are actually securities that you're selling and you're not registered, and these are unregistered securities. So the SEC is suing you, and you have to stop doing it. And that sends a message to other people in the industry who might be doing the same thing, that they better stop what they're doing, or the SEC is going to come knocking on their door. That's not a great way to regulate. Certainly not a great way to regulate a new innovative industry. So I think I've been saying for a while that I think Congress needs to get involved, and I think they need to kind of lead, because this is a new. I think it's a new asset class. I don't think that rules from the 1930s and 40s should be used here. That's, like there's this thing called the Howey test, which the SEC uses to determine if something's a security that falls under its jurisdiction. That dates back to a 1940s Supreme Court case that was about a guy selling plots of shares in an orange grove in Florida. That's about as far away as you can get from something that's a smart contract where you're interacting with code, and that's your counterparty. So Congress, in my opinion, needs to get involved. We're seeing movement. Like I think the UK is doing a good job. I think they are on the forefront of sort of recognizing that this stuff is new, and that, but it is also, it's not vastly different. It can fit into a lot of the same parameters we have for other assets. Hong Kong just recently said that it's going to look at relaxing some of its rules, and it's a big change from them. Just in 2017, they were telling people to not get involved with crypto, that it was a scam, and so they've really come around on that. So I think that's kind of where it, it's hard to say, because like Congress needs to get involved, but that's a huge lift, because there's not a lot of congressmen or women who I think are well versed on this stuff, and it does take a bit of education. So I know there's a lot of lobbying groups that the crypto industry has that are working on trying to get people to understand the fundamentals of it, and to try to educate like people in Washington D.C. so that some new legislation can be written. But it's a slow and kind of painstaking process.
Yeah, it's certainly aggravating on a lot of levels. I mean, I will say one thing, and I'm certainly not one to sing praises for regulators too much, but I think, with new technology, the lack of regulation initially is helpful, because then they're not declaring this is the way it should be, because that
Yeah.
stymies innovation. This is what happened with the internet. I mean, they didn't tax it until what, 5 years ago? Was it? It was, I can't remember, but it was somewhat recently. The internet had been around for a while, but they didn't tax it because they didn't want to stymie innovation. So well, the government, I don't hold high regard. I don't think them as generally smart as a group. I do think that thinking does help, but I don't know. See, this is the challenge. I don't know where we are in the evolution of this technology. Like, I can imagine this is the next internet, where it's going to change everything in ways that we don't expect, much like the internet did. Um,
Yeah,
but
and I mean, imagine if we had all been paying this much attention to the internet as it kind of came out of the sort of DARPA college environments, and came in, out of chat rooms and into the first web server, or web browsers. I think everything is so much more. The attention can be focused on so much more these days than back then. So it's kind of like, I think this would be, let's, if there was less attention, it would still be going on behind the scenes. And then it might come to this point where all of a sudden you're like, oh, did you hear about this Netscape browser? Now you can like surf the internet, and it's like this amazing change that leads to all this innovation and efficiency. So we're looking at the blockchain world kind of under a microscope in comparison to that, in my opinion. So I think people have to be patient, and this stuff is happening, but the internet took time as well. There weren't, like, it didn't just like magically appear. So I think that's one thing that people need to kind of keep in mind, is that the work's being done. It's just that this takes time, and I think it will change things. It's just that it's slow and episodic, like I was saying.
yeah, no, it's interesting. I know that I'm surprised that the industry itself doesn't create a self-regulating organization. So they dictate what the rules should be and let the government follow them.
Yeah,
Much the way that
there are a
these
few
systems.
efforts to do that. Like
Okay.
the Gemini, like the Winklevoss twins of Facebook fame, have started their own self, industry kind of self policing. You got to remember though, like there's a lot of money changing hands here, and
Yeah.
that's something that is like going to get the government's attention, and certainly getting the IRS's attention, and the Securities and Exchange Commission's detention. So it's not like just a bunch of computer programmers, sending emails around and stuff. It's like people are making a lot of money and becoming billionaires, and other people are losing all their money. And so, there's a lot at stake here.
Yeah, no, that's for sure. I've met a lot of people with way more money than they should have at their age, but hey, I'm just jealous.
Yeah.
So, well, Matt, I really appreciate you joining us on the show here and helping out. Where can people find more about you?
Yeah. So you can find me on Twitter. I'm at Matt Leising. I wrote a book about the history of Ethereum and how it was created. It's called Out of the Ether. You can find that on Amazon or anywhere you get books. My new web or crypto media company is called Decentral. That's at DECENTIAL.io. Yeah, that should just about cover it.
Awesome. Well, Matt, I really appreciate you coming on the show. Highly recommend listeners get the book. It was a fascinating read. Yeah, Matt, I appreciate it, and we'll definitely have you on again. The internet, the blockchain and cryptocurrencies are not going away, so we'll have plenty of stories to share in the future, I'm sure.
Absolutely, Kirk. Thank you for having me. It's been a pleasure.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. You mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room. All right. Well, that was a great interview with Matt. Really appreciate him coming on the show and sharing his wisdom with us. It's always nice to get people who are in the trenches, doing the research, finding the cool stories that really kind of make, the space pop. And obviously, in that it's such a new space, we're going to have lots more stories. We actually have one that just came out last night as of the taping. So we don't even have all the information on it yet. But to me, it's going to be interesting talking about this. So this week we have our very own Doug Hagren. Hey, Doug.
Hey, Mike Probs. Good morning, Kirk. How you doing this morning? Happy post election day, wherever you may be.
Yes. Well, someone's bound to be happy and someone's bound not to be happy. It's after election day. So at least half, well, maybe half will be happy.
We can guarantee it's emotional at least, right?
Absolutely. And we also have our very own Barb Friedberg. Hey, Barb.
Hi, Kirk. Hi, Doug.
So we're going to have Barb take over the mic here and MC this shindig panel. So take it away, Barb.
So happy to be the leader today. So Matt Leising, He knows a lot about blockchain, cryptocurrency, DeFi, and we're going to unpack it all for you to the best of our ability. So, Doug, tell us, what were your takeaways from the interview?
Well, I decided to go find a cave out in somewhere in the middle of nowhere, walk into it and read the hieroglyphics on the wall. And I probably got a better interpretation of crypto than most people in this world have, or a better interpretation of that language than most people have of crypto. And there's a lot that's happened in the last couple of years. There's a lot of that that's happened into the future. I think the fact of the matter is that crypto's here to stay. I think that it is that there's still a lot of confusion. It's the early stages, like Kirk talked about, of what that's actually going to mean with regards to our society, how transactions will occur, how it's going to be used, what it's effectively eventually going to become. I mean, it's very difficult in any society, especially when we think about crypto, where people get very fixated on the currency portion of it, right? What it can do in terms of transactions. But the underlying technology is much, much deeper than that. I mean, really, the blockchain technology is how to effectively be able to transmit information in ways that are kind of direct from sender to recipient, right? Without, it's decentralized. And there's a lot of different uses for it. And we get focused on this financial side of it and using it for that. And I think in the early stages of where we're at right now, that's going to be a challenge. Like Kirk mentioned with technologies. I mean, if you look at the United States right now and we have a currency, it's the dollar. You try to bring in a euro and use it in the United States. That's kind of hard to spend that, to use that euro. There's very few places are going to take it if you don't exchange it. Well, I mean, right now, the list of currencies out there is thousands and thousands of them. So, where is this going to go? Which one's going to be usable? If you have one, will somebody else take it? There is a lot of things that we'll have to sort out over the years. And I think the one thing is for sure it's here, but I think even some of the best experts that talk about this, as he kind of alluded in his interview, there's still a lot of questions that even the experts have on exactly what crypto is, how blockchain is going to be used, and what eventually it will morph into, and what's going to float to the top.
A lot of questions, not so many answers. So, Kirk, can you give us a thumbnail of what you took away?
Yeah, I really love this interview, and I think Matt did a great job at at the interview, but also just I think with his media company, just getting the word out and just trying to relay a lot of the news. I kind of go back to the 90s with the internet and computers, and obviously computers even in the 80s, but if you look at the technology that kind of came out of the personal computer and the internet, and you think about all of the productivity that was added to our economy and our culture and society as a whole, things have evolved very quickly, even though it took decades. You look at it in the scale of history, and it was really rapid, and and new technologies keep getting adopted more quickly, and for many reasons. But I think one of the nice parts about blockchain and crypto and NFTs and all this technology that's coming out is that it makes a lot more possible that prior was really not. I mean, where else could you send money around the world in a second, right? Right now it takes a few days to send money around the world. There's no reason it should take a few days other than the banking system requires it for multiple reasons. I'm not going to sit here and put on my tinfoil hat and say, oh, the bankers are just trying to screw everybody. No, I mean, granted, yes, they do make money off the float, and I'm sure there's a lot of incentive for them to continue to keep that. But it also allows people to verify transactions and other things that are important. I was at the Federal Reserve a few years back. They were giving a seminar on a bunch of stuff, but one of the topics that came up was international transactions. And one of the individuals from the FBI was there talking about it, and it was really cool because he said, look, let's just say you decide that, hey, there's actually a Nigerian prince out there that you want to send money to, and you send money to him and you decide, whoa, that was a mistake. I want to send it to the other Nigerian prince. I sent it to the wrong one. I think, I forget what he said, but I think you have like an hour or you have like a few hours in which you can actually stop that. And so if you make an error and I forget who you call, I have to pull up all my notes, but there's some place you can call, but you can basically block that transaction from happening. Now, if it was instant, it's gone. There's nothing you can do. And frankly, the amount of time that you have to block these anyway is pretty slim. But, there is a window, whereas, with blockchain, there's no window. Now, granted, there are other reasons that you could work through that. But if you make an error in judgment, you can't come back from that, right? If you give somebody your crypto or you give them your wallet keys, you're done. It's their money. It's, what do they say? Ownership is 9/10 of the law. It's, either you have it or you don't. So while there are great evolutions in progress, there are also challenges that come along with that. And I think what we're seeing now is basically the same thing we saw in the 90s, which is there's wide adoption happening, but it's slow because while I had a computer back then and I thought it was pretty cool, and I was doing, basic with the turtle and making it scroll across the screen, all that fun stuff we did way back in the day. Like that was pretty cool. But, you think about what it is now and things are so far advanced. But in the beginning, not everybody had a personal computer. I had one because I wanted to play games. That's the only reason we had one in our house, is so that we could play games. There was no other practical use for it, in my household. So, but now we all use it for everything. We use computers, phones. It's amazing. And I think crypto is going through the same adoption process, albeit probably quicker, is that it's going to make everything more cost effective, more secure. You think about it, right? Like what we all try to do on a daily basis, we hide our information. We're hiding all this stuff. We're keeping it from predators, from phishing. And yet with blockchain, you just put it all out there. Everybody sees everything. And that's the security. So, what is going to be adopted and allowed over the next 10 years, I think, in my view, is going to be amazing. I'm certainly not the foremost expert in this area, but I just see the vision and it's so clear. You might disagree with blockchain or crypto. You might say, it's worthless. You might be like Warren Buffett and say, I don't understand it. Of course, Warren Buffett has been against technology for the last 20 years too. So take that with a grain of salt. But, if you look at people who are big name people who are saying crypto's a joke, it's worthless, it's fake money, you could say that for 20 years and be wrong for 20 years and then say, oh, I guess I was wrong. But you can't ignore the fact that this is a technology that is going to be adopted because it has to. It makes everything better. So you can't say it's not a thing. You might decide you don't want to invest in it. That's a totally different avenue. But you can't say it's not a thing. You can't say it's going to disappear. It's not going to disappear. What it's worth, where the value is, nobody has any idea, right? Because, look at the top 20 computer companies back in the 90s. There were none of them like 10 years later. They all were bankrupt or merged or whatever. So we don't know what's going to happen. But we do know that I can say with 99% certainty that blockchain is going to be a thing and it's going to change our technology for the better. Just, really just don't know what it looks like specifically.
Both those answers move us forward into the reality that blockchain is here to stay. And if you don't believe Doug or Kirk or Matt, look at the big financial companies across the globe. They are all investing in blockchain. So even if we don't understand it, even if we don't know who the ultimate players are going to be, it is a reality. And what you do with that is really up to you. You can do nothing. You can watch it evolve, see what happens. And nobody got hurt from waiting to get in on the internet revolution. If you picked Microsoft on day one, yeah, that would have been awesome. But did you have to in order to make money off of Microsoft? Absolutely not. So let's get into the more practical aspects of blockchain, cryptocurrency, NFTs. Let's talk about investing for you and me. Should we invest in that? Doug?
Well, I think the answer to that is like anything with investing. And I think, let me back up for a second. I think that's one of the interesting dichotomies of this whole thing is like, because if you listen to people that are out there that are talking about it, they keep talking about crypto as a currency, right? Well, if crypto is a currency, that is, and especially some of the arguments about store value, that is essentially the anti-investing, right? So I think that's the big question: is which way are we going with this? Is crypto going to be a currency, which would be, again, a store of value? I'm holding on to something. I know what it's tangibly worth to a degree. I can buy stuff with it. It's used for transaction. Or are we going to have it as something that I'm buying because I think it's going to be worth more someday? That's not effectively a store of value, especially as you've seen recently with, 25, 35, 70% drops, right? So I think one of the issues we've got here is there's a battle on one side of thinking that this is going to be something for transactions. And then there's a battle on the other side of thinking that this is something that's going to be worth your, winning the lottery with, right? And as long as that battle's going on, it's going to have a harder time adopting into an everyday use, because it kind of, those things take you in two different directions. Now, one of the things I think is and I think the blockchain technology that, as Kirk is referring to, is the technology is here to stay. I think the technology is definitely worth investing into, because technology is worth investing into. I mean, there's no question. And I forget what the statistics were with the, with the microprocessor, but what was it, Kirk, or Barb? I don't know if you remember, like, how much technology was supposed to compound and double, how quickly?
18 months.
18 months. So exponentially, everything is just popping and popping and popping. And we're seeing that. And this is the next evolution of that. And so we look at, as an investment, crypto very much heavily correlated with what it is underlying a technology, right? So again, if we're going to look at it as an investment, I think there's very good argument to make to have it as an investment in your portfolio. But understand where it is right now as an investment is very much what it is at a baseline. It's a technology. So you're seeing a continual pattern of correlation between the volatility of the values of crypto and the current and the value of technology as a whole. Now, obviously, they're not going up one-to-one. There's a great opportunity with great volatility to potentially make tremendous amount of return on the investment in something that has wide volatility. Volatility is not a bad thing. Everybody thinks of volatility as a negative, right? Oh, it's volatile. You can't get great returns without volatility. Volatility means upside and downside, right? So you can lose, you can make 70%, 100%, or as we're looking at certain, as I was looking at certain technology comparisons here of different cryptos that are out there just for fun kind of earlier, if I take a look at, Dogecoin, for example, over the past 5 years, and not one that's necessarily been accepted as readily as something that might be a currency, but it's definitely been, very hot in the Reddit sphere as something to invest in, as it was promoted and by, Elon Musk on Twitter, although I should watch saying promoted, because then the SEC might get on top of it. It's just encouraged, right? But I mean, if you take a look at, the 5-year return on Dogecoin, 7,900% return, right? So yeah, you can make a ton of money. Now, at one point, Dogecoin was up 55,000%. So, depending on when you got in and bought it, you still made an incredible return on it, or you've lost a lot of money. So I think it is definitely something to invest in. I think technology is heading that direction. I think the ability to transfer data seamlessly to direct. Although I do want to back up, Kirk, because you were talking about, one of the things he mentioned is, you send this transaction and it's instant, and if it's gone, it's gone. Funny thing is, that's a little bit about how Venmo works. I mean, when Venmo has had to insert some protocols. I don't know if anybody's used Venmo recently, but when you send money now, it asks for the last 4 digits of the cell phone of the person that you're sending to as a voluntary protection to you, because Venmo has a policy that when you send that money, and it's really easy to send money to the wrong person in Venmo. It's happened. I've done it at least once. Well, if the person on the other end accepts it, it's done. Transaction over. It's gone. right? So if anybody's ever lived through that, seen that mistake as a currency component of it with Bitcoin, one of the negatives that you're mentioning is, yeah, that money can be absolutely, taken from you from one little error. It's kind of like the new bearer bond, right, Kirk? Once you got it, you got it. Bearer bonds as a currency, kind of went away because there was a lot of problems with all of a sudden, somebody grabbed the briefcase and now they owned all the money. So I think
Die
there's
Hard.
something. Yeah, yep, absolutely, exactly. Hey, it's a Christmas movie. So I think we're coming, to some things that need to be sorted out there. Again, between, is it a currency, and how is it going to be used with that transparency to be able to be effectively transacted versus an investment. I think you can definitely see the value of it as an investment. The question is how much. I was actually looking at some of these new funds that have come out that have invested in crypto. And interestingly enough, over the last year, some of these crypto funds have actually performed better than the underlying cryptos. So again, not knowing which one's going to be king dog, not knowing which one's going to be the future currency or the technology. I think that, again, how much your portfolio at it? Do you diversify and just kind of grab a broad section of them? All of these things have to be sorted out as to determine how much you should. But I would agree that anytime we have got something new that's being developed that looks like it's going to at least have some level of sustainability in our society, is something worth at least having some sort of an allocation to.
Kirk, so let's say that we think you should invest or not, forget that. No, we're not going to say you should or you shouldn't invest. But if you want to invest in blockchain, if in cryptocurrency, in NFTs, we're not recommending this. We're not saying you should or you shouldn't. But Kirk, if you wanted to, what are the avenues? And I just want to put out there, my recommendation is always, when you're investing in kind of an unproven or a lesser known asset class, don't go all in unless you're willing to lose everything you invest in it. But be a little cautious, maybe take 5, 3, 6% of your total investable assets and invest, but don't put a lot of money in. So Kirk, how does an investor choose, and what type of investments are out for someone who wants to tap into either cryptocurrencies, NFTs, blockchain technology?
Yeah, and I think, pulling off some things Doug said, I think it's one of the most important things you can do first before we get into what you can invest in is why you're investing, right? Like, why are you doing this? And there's no right or wrong answer, right? It's your money. You can do whatever you want to do, and you should. But the way I look at it is, we actually had a great debate here on this show a few years ago, gold versus Bitcoin, and there were some great arguments on both sides. And my takeaways from the debate, even though I think Team Gold, which is my team, won, I think that really what it comes down to for crypto is you can argue whether it's a hedge against inflation, but it hasn't been around very long, so we really don't know if it's a hedge against inflation. But we do know it has a track record of a good speculation. And I think you have to look at it as a speculation, much like you did in the 90s with the internet and new technology and computers. It is a speculation at that point. We didn't know computers are going to take over the world. We had no idea. I mean, you had a pretty good sense at that point that was going to happen, but you didn't know, right? Things could have broken or whatever. Right now, it's the same thing with blockchain and crypto and NFTs. We don't know if it's all going to disappear. I think it's a chance, near zero chance, that it's going to actually not evolve from here. I think it's almost inevitable that it's going to evolve from here. So I think you have to look at as why are you investing. Is it a speculation? I would deem it as a speculation. That's how we look at it, right? We like the concept of an asymmetric risk trade, which is, as an example, you go to the casino and let's say the odds are 50-50 of winning, and you have a chance of winning $3 or losing $1. That's what I would call an asymmetric risk trade, is that you have a chance of gaining much more than you have a chance of losing. all else being equal, of course. So, we love opportunities like that. And I look at crypto as an opportunity for an asymmetric risk trade. You have to be comfortable with the fact that your investment could go to zero. We've seen it. We've seen it with a bunch of coins, cryptocurrencies in the past few years, as a number of them have gone to zero. And, it brings up the example of what happened this morning. We're still getting the news together, but, there were two exchanges. There's Binance and there's FXT. I'm sorry, FTX. Fumbled that one, FTX. And they're merging in part because there was a loss of confidence in FTX. And, the news will probably still come out. But basically, there's a liquidity crunch and people were pulling their money. And so it was kind of one of those things. But the crypto industry, effectively, those two companies banded together and bailed out the exchange by merging. And, FTX had done that to a few other companies in the past, too. So I think in many ways, it's self-policing, which is great, right? Yes, there are problems, things happen, people lose money, but you have to look at this as speculation. Unless you're in the crypto industry and you know everything there is to know about it, then you probably have a good opportunity to look at it as an investment because you have more information than most people. But for the rest of us who are just Joe and Susie Lunchbox, who are paying attention but not really closely, you have to look at it as a speculation and know that you could lose a lot of your money that you put into it. That doesn't mean you should ignore it. That means that you should understand how much money you're putting in. So if you look at it and say, I'm going to put 100% of my money in, and I really don't know what I'm talking about, that's just plain dumb. I'm sorry. It's just plain dumb. But if you're going to put 1%, 2%, 5%, whatever, some number that you're comfortable with, look at it this way. If 100% of that 5% goes to zero, you've lost 5% of your portfolio. Is that going to break you? Probably not, right? It's only 5%. Nobody wants to lose 5%, but what if the upside is that 5% turns into 50%, right? That's how I look at it, right? So is it worth it? To me, I look at it and say, if you do the risk management properly, absolutely it's worth it. But if you don't know what you're doing, if you don't understand risk management, find somebody who does, or just ignore it. You don't have to invest in everything. We have this psychological thing. It's called, keeping up with the Joneses, right? Or FOMO, which is people feel like, oh my God, everyone's making money and I'm missing out. Who cares? Look at Warren Buffett. He's made a career on not getting sucked into FOMO. And he's probably made a lot of bad judgment calls because of it, because technology has grown so fast and he's missed it almost completely. But, that's his style and good for him. Good for him for ignoring everybody else. That's why he lives in Omaha, so he doesn't have to get sucked into the FOMO. So I appreciate that. I think, I probably would have done it differently, but he's Warren Buffett and I'm not. So who am I to judge? So, but when you look at how to invest, and it gets back to Barb's question, I think it's important to understand how to look at it first. Now, that being said, knowing that it's a speculation and you could lose all your money or you could make good gains, and you have to be comfortable sitting with this and saying, I'm throwing my money away. If you can honestly sit there and say, I'm throwing this money away, and if it's gone, I'm okay with that, then you'll be fine. But if you're fooling yourself, then you're going to be disappointed. And that's what you don't want with investing, unless you have rules in place. Now, getting back to the investment, there's a handful of places that you can invest. The simplest for most of us who are not techno geniuses, who don't understand crypto and wallets and keys and all that. But most people don't understand that. It's really simple. You can find there's a few closed-end funds that trade publicly. I can't give the symbols. I don't want to get in trouble with compliance, but let's say there's a few. There's, I think, an ETF as well, but they're different. Closed-end funds there's one for Bitcoin, there's one for Ethereum, and there's one for Ethereum Classic, and there might be more, but that's off the top of my head what I know. So there's a few closed-end funds. Okay. There's also an ETF out there which is based on futures. So you should understand what these things are backed by. If it's a closed-end fund, it owns the actual crypto. So it's pretty secure because you've got shares that you're buying and it's backed by the crypto. As long as the crypto's there, then the shares are solid. Now you have an ETF which is backed by futures. Now, if you are invested in commodities which are backed by futures, you know that effectively over time this thing eventually loses money because of the way futures work. It's not that they're bad, but over time it deteriorates in value because they have to roll contracts every month. So that's a challenge that you should understand before you get in. It has nothing to do with the underlying, has nothing to do with whether Bitcoin is a good or bad investment. You should understand how futures impact ETFs. So you can do ETFs. You could buy futures. You could go out there if you're so inclined and have a futures account. You can go out and buy the futures. There's also options on these, which I love. It helps you manage the risk. Very, very high premiums. So you should know that. And also you could just buy the underlying, right? And I think for people who, and here's what I would advise. I think everybody, what they should do is you should go out, take whatever, $100, something nominal that if you lose it, you're not going to go cry. Take $10, take $100 and go try to buy some Bitcoin or Ethereum or any other coins you want to do. Start with one of the bigger ones, because if you're buying some, I guess they call them shit coins, but if you're buying one of these things that could be worthless or not, and believe it or not, they're actually called shit coins. People have that kind of name. But anyway, if you want to buy a main one, try a main one, because the bigger ones, they have established networks and they have established ways to hold these. So go buy one of those, because somebody can actually help you. If you buy some obscure coin and nobody knows how to do it, you're just going to get confused. Buy one of the established ones, go open up an account, put $10 in, and try to set up and figure it out. I did this a few years ago. It took me 2 weeks to figure it out. Like I had to drop it. I was like, I'm frustrated. I'm done. As things improve, it will become easier for Joe and Susie Lunchbox to actually figure it out. Or find somebody. Erica Gemma's been on the show a few times. She's phenomenal. I'm going to see her at a conference actually next week. We go to the same conference every year. And last time she was just sitting there helping every single person. Hey, let's help you set up a wallet. Let's help you try to do this. Like, she's there educating people, making it easier for, everyone to learn this stuff. It is difficult. You should know that, but don't put $10,000 in there and then lose it and be like, well, that was stupid. Start with $10, right? It's the cup of, it's the cost of a cup of your favorite Starbucks coffee is $10 nowadays. So if you lose that, so what? You didn't have a cup of coffee. But start small, make your mistakes small. Once you understand it, then you can decide whether you want to do more. So that's how I would look at it, Barb.
Thank you. That is a way to directly invest in individual coins. And that's a good tip. It's cheap. It's the most you're going to lose is a few bucks and your time figuring it out. Or the funds, the closed-end funds, which I don't know if I can say them or not because I'm not a financial advisor. Grayscale has a whole slew of them. There are also, though, a lot of different platforms where you can actually invest in crypto on those platforms. The difference is many of them don't have a wallet, which means you can't transfer that crypto out of the platform. Or transfer your existing crypto into it. So that may be a drawback for you. But I'm going to broaden this out just a little bit. For those of us who go, well, I just want to get in on the blockchain idea. There are new blockchain ETFs emerging every day. Schwab just came out with one a couple of weeks ago, and this is an idea that the technology is not going away. So if you want to get in on it, go with a blockchain ETF that will do the figuring out for you where to put the money. And they invest in a diversified mix of companies that are expected to benefit from the blockchain technologies. So, Doug, any more ideas of if or how to invest in these new blockchain crypto technologies and whether we should?
Well, I think that one thing that Kirk was talking about, because I'll go back a little bit, was his was comparison between gold and crypto a couple of years ago. And what's interesting, it made me think about what is crypto backed? What backs crypto? And there's a lot of different things that are backing these technologies. Bitcoin, for example, is backed by mathematics. It powers an underlying technology. You've got to have the transaction verified so no one can double spend assets. And that way, the idea is to allow the network to remain stable. and hopefully bad actors can't cheat it. Ethereum also has, you have to hold a certain amount of Ethereum before you can be a verifier to be able to ensure these. So it's, again, it's kind of it's a way of these technologies being supported and being protected through basically a crowdsourced kind of mentality. But going back to the gold for sale, we have commodity backed or literal asset backed cryptocurrencies that are out there too. There are some gold backed cryptocurrencies that exist, which, let's go to gold for sale. So gold might be better to hold than crypto under an argument, but it's not exactly a very accessible asset, right, Kirk? It's not easy to necessarily go out there and get it. You might have to buy an entire bar. Now you can get an ETF that might be tied to futures, or you can invest in a fund for gold, where many of them, if you really peel them back, are not really investing in gold. They might be investing in gold miners, the companies that get gold, which isn't necessarily tied to the true value of what gold is. As a matter of fact, even some of the futures values haven't been accurate, because if you ask someone who's investing in futures what the value of gold is right now, and you go ask someone who's actually holding gold, they'll tell you very different values in terms of what it's selling for. So sometimes, this may be a way, this also may be a technology that allows people to get more accessibility to things that was, much harder to get a hold of in the past. So for example, instead of investing in an entire gold bar that might cost you tens of thousands of dollars, you could invest in a fractional amount of gold, and that's tied into crypto at 1/1000th of each. And so I think that from a, anytime, going back to your question, the questions we've stated here, does it make sense to invest in it? If you go back in the course of history, anytime something that can be invested in has achieved a greater accessibility from the masses, right? It's one thing to say, well, I think fine art is a great thing to invest in. That's going back to NFTs, right? It's one thing if, to say that, but I don't know about you. It's a very select, small community that's going to be able to go out there and go to a Sotheby's or Lloyd's of London or some other auction house and say, listen, I'm going to go ahead and I'm going to bid up $5-10 million for a Van Gogh. It's just not happening. Not many people have that cash. So ultimately, yeah, those values are great. But when all of a sudden you can make that accessible to the masses, where thousands, if not millions of people can now have access into something, which is kind of the idea behind NFTs, is now anybody can go out there and potentially get the digital rights to create, creative arts, things that are copyrighted, things like that. You are now creating, what does it come back to, Kirk? How economics works: supply versus demand, right? And so you're increasing the demand significantly, and by reducing or by expanding the amount of supply that's there to the masses. And I think because of that, it definitely leads to another argument that there is going to be a continual push or use of blockchain technology. I would get a kind of way from crypto. I think crypto is kind of a negative thing. We think of crypto, and if you go back to the meaning of what crypto really means, based off of the Greek etymology of it, it means secret or hidden, not evident or obvious, which is, and concealed and hidden, which is exactly why they like it. Crypto, my money is hidden. It's, it's secret. Nobody's going to be able to take it from me. But the number one use that we use for crypt is going to be where we store dead bodies, right? So I think there's a negativity that comes from that, the root word in the word crypto, that I think is probably also at some subconscious level a negativity for a lot of people, just because of how these words are constructed. But the reality is that technology is there. It's making anything, whether it is asset-backed or technology-backed or other types of backing that has created this foundation, it's making it more accessible to the masses. Anytime you give more accessibility to the masses, it generally leads to something that A, is not going away, and B, is going to have an increasing value of sustainability. The problem right now is, just like in the 90s, there you've got Amazon and you've got buy.com. But now you've got Amazon and thousands of buy.coms. Where do you put your money? Okay. So I think that the accessibility through ETFs is going to be helpful. The accessibility through mutual funds is going to be helpful. I think the a continuation of adoption of some of these things, like where should I put my money? Well, I've looked at the track record of Ethereum. I've looked at the track record of Bitcoin, and though the valuations are different, the actual movement percentage-wise of return has been fairly correlated, whether it's between ETFs or new ETFs or mutual funds or the actual currencies themselves. Now, I can't speak to that on some of these, these coins that Kirk was referring to that are just out there being produced every single day. So if you like anything you should invest in, stick to what you know. Stick to what has more research is generally going to reduce your risk. And yes, if you want to put a little money on something that's just a complete speculative blockchain or cryptocurrency, you can do that, as long as you are okay with a complete loss of capital. If, for example, that coin ends up becoming the next buy.com and disappears, evaporates, which is going to be absolutely a fact through either merger or dissolving, failure. You're going to see a lot of dead bodies that are going to be out there. So I think if you're going to get up into this, just remember loss of cap, protecting from losses is much more important than just dipping for gains. So don't try to go out there and, get 100 times your return on it. Invest in it and where technology is going, and allow that to be something that helps to diversify you overall.
Great. Thanks, Doug. And we're going to kind of wrap it up here in the interest of time. But Barb, final thoughts, and where can people find more about you?
Final thoughts, education. I feel like I say this every single time. But the more you know, the smarter and better an investor you will be. You don't have to invest in this technology. You can be fine without it. You can go with stock and bond ETFs, mutual funds, and do just fine. Or you can choose to invest a small portion. Unless you are a humongous risk taker and also very young and have time to make back your money, I wouldn't suggest going all in on blockchain or crypto. My name is Barbara Friedberg. You can find me on YouTube, Robo-Advisor Pros, and Barbara Friedberg Personal Finance.
Thanks for coming on, Barb. And Doug, where can people find more about you?
Yeah, Douglas Hager. You can find more about me at procollegeplanners.com. If you have a child that is high school that's going to be planning to go to college, you can't afford to not get the information that you need to be able to get your costs down and make sure that they get in the right school that's going to give them an extraordinary future. And unfortunately, too many people go into this blind. Princeton Review says it can take just 6 to 8 weeks of dedicated time to figure out what the right schools are. Look, we're talking about being educated on crypto today, but number one thing on everybody's mind is the education of their children. You want to make sure that they end up in the right place, that they get in and out with the right career path, that they walk off the stage on Friday with a degree into a career on Monday. And if you're going to do that, it's going to take time and effort and resources to do that. Get the help along the way, because the game is rigged against you. Learn more at procollegeplanners.com.
Great. Well, thanks again for joining us, Doug. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.